Long time no back test. Long time no post. Haven't done a post in a minute. Have been working on a few other things in the background, getting my mind, my body ready for getting back into school, going back to going not going back because you can't go back, going into trade school in the next couple weeks. So just getting myself ready for that, setting up certain things on the back end so that I'm still able to make some type of money while in school. But yeah, just haven't been doing much of trading. Have been looking at the charts, have been looking at the markets, but just haven't done a backtesting session. So I have been studying as well, looking at ICT's 2023 mentorship. Um, it's the silver bullet understanding there as well. Just understanding price action a lot better, how it unfolds, being more of an observer than a um, anticipator, right? Just being able to sit back, look at the chart. What is price respecting? What is price disrespecting? What is price printing? What is it not printing? Where's order flow? Where's liquidity? Things of that nature. Just taking a more calm approach to it. I feel like anytime I'm more calm, I'm able to make the best decision, and that's what's needed in this business, right? Being able to make the best decision because that's all we're relying on at the end of the day is making the best decision to either buy or sell. I was looking at this movie with Matthew McConaughey and Al Pacino. Two about sales for gambling. You can this movie really good. I wouldn't say really really good. I mean, if you're into the space of like sales and trading and gambling and stuff like that, then you'll catch on to it. You'll feel how I'm feeling about it. What's it called? Here we go. It's called Two for the Money. TWO for the Money, with Al Pacino and Matthew McConaughey. Um, but literally, like in the movie, there's a couple of scenes where Matthew McConaughey is literally just flipping a coin and making his picks. It's a sports betting based movie, so he's flipping a coin and he's making his picks based on that. He has like an intern who just gets hired, and he's looking at him. He's like, "Who do you want, Vikings or Seahawks?" The kid says, "Nah, I don't want to do that. Vikings, whatever." Right? He's like, "All right, cool, Vikings," and the pick wins. So it's just like the randomness side of it. You can't like you can't beat it. Um, but nonetheless, not to be dragged on. Let's just jump right into this. Uh, ES. This is Friday, so we're just gonna skip that and go right into a new week. Go into Monday. Still have to get like a new, what do you call this? I don't know. I don't know if it's FX replay because when I'm on FX replay outside of uh recording it, it's pretty speedy. But like once it's on, it's like just yeah, let me see if I could delete some of these discords. Like get all of this in the background out of here. Maybe that's causing it to slow down. Maybe see if I could do that, and then have like some of these closed up here. Close this because I got that. Alrighty. Oh, this is Trading View. Here we go, right here. All right, cool. So, still a little finicky, but nonetheless. So, only going to be looking at 8:30 to 11 a.m. I know, like every time I come onto these, like it's always something different, always something new. I always have like a new like something, but I don't know. Um, but let's just jump right into it. So, So looking right here on the weekly chart for ES. Okay, so this order block back here is supporting price. We're finding support at it by respecting the mean threshold here, pushing higher, created this weekly order block here, respecting the open. So here on this candle currently, this is the current week. We tap down into this. I wouldn't want to see the mean threshold of this get broken through. You can see here that we delivered right to it and then showed some displacement away. I don't want to see it traded through like with bodies below. So I would want to target the highs up here and potentially this gap right here. So I'd go ahead and drop down into the, oh, this is the daily actually. Okay, let's just keep it like that then, if that's a daily. And yeah, cool. So this is Monday here. So you can see here on the hourly, we're supporting this weekly order block here. Failed to trade below this low back here on this Monday. We have a fair value gap that trades price lower into this liquidity pool, but we don't take it out. We fully rebalance this gap here. So this is now a balanced price range. We have a fair value gap here. We also have a breakaway gap below. So this fair value gap should support price for higher. Now I would want to see where this price looks smooth. Price looks smooth right here. Like where's this price looks? Yeah, like this area here. We also have this gap right here. And prices in a consolidation. So there's that as well. But looking at it here on the hourly, like we took out liquidity here, traded up into this order block, traded lower from here. I'll have to wait and see what price does inside of this to be able to really give my input. So yeah, we have this fair value gap here. Now we could refine it a little bit more to this gap there. We tap it. Now we're displacing higher, most likely looking for this high up here. Inside of this gap, this volume imbalance. So we could go down to a 5-minute and we could see prices supporting this 15-minute gap. We push up higher, create a bullish order block here, fail to close below the mean threshold, find support. We have this order block here with a fair value gap here. This would be the target. Price trades down into this. That's a buy to get up into the gap here in buy side liquidity. There you go. Price just displaces up to that gap and to these liquidity here. So that's off the menu. This is 8:30. So there we go. We take out liquidity here. All right. So now we have a bullish order block here. I mean, not a bullish order block, a bullish breaker right here. So if we're truly bullish, then we shouldn't close below the mean threshold. And we should support this action up higher. There we go. Get some bullishness. This is midnight open. And just so I can remember again. Okay. Daily, 1 hour, 15. Weekly doing. Yeah, weekly is just nasty. And we do have this weekly order block here as well, so that can be pretty key in the direction now. Yeah, that could play a part in direction as well. A huge part actually. Copy. Now, we have relative equal lows here. I would want to see if price can draw to these relative equal lows, especially with this gap here on the volume imbalance. So let's see. And looking at it here, if we get a close below these candles here inside of this gap, fully filling in this gap right here, this fair value gap and this breaker, then we could look for those lower prices here. It's 9 a.m. as well, so okay. Find resistance at the mean threshold of this order block. Let's see if we can displace lower, and this is 915. Yeah, I'm gonna look for lower prices potentially. Here's 930. Small fair value gap in there. Wick trades up, takes out the high, but where does the body close? That's the most important part. Wicks can do the damage, but the bodies tell the story. All right, so let's just continue price. Now, this wick here, I would look at as a resistance level. So I'm looking at the mean threshold of this wick to see if we either close above or respect to trade lower. Looks like we're going to continue higher. Yep, continued higher. We could even see it on the 1 minute too. So now we're at the 10 a.m. open for silver bullet. 15. This is the weekly order block, so we can draw to that. Here's your institutional order flow entry drill using the weekly order block as the draw. And there's some buy side resting above it as well. So this will be like the draw right there. Let's see if we can get into this here. Place this order 50%. May not get into it because of how it closed. Oh, we get tapped in. Oh, we get tapped out. I was buying above highs. Should have waited. Tap into, yeah, I should have waited for the retracement down to the fair value gap here. Even on a 5 minute. Not really. This is pretty choppy as well, and it's Monday, so could have forced this, but here's a breaker. With a volume imbalance. I'd be down to take this setup here. We get tapped in at the volume imbalance. So now from here, what I would want to see is price continue pushing higher. Looking at where we are, we're still in that window from 10 a.m. to 11 a.m. And judging by the hourly, we can look to continue pushing higher for the gap. For the liquidity. Price taps the volume imbalance once more. We close above. If we close above these last two down candles, I'll look at that as an order block to continue higher. There we go. This now is the order block that I would want to see price stay above. There we go. There we go. Fair value gap here. I would want to see this left open and see price flush. There we go. Nice. Get in, get out. Nice delivery here. Price ends up tapping the fair value gap. Fully balances it and then displaces higher. So nice trade here. I knew that the initial buy that I took was in a premium. So waiting for it, sitting back, looking at the breaker and entering off of that, entering off of the volume imbalance was good. So good trade there on this Monday. We could go ahead and go to the next day. Go to next New York session, and we could see it just follows through. What I also want to stick with, and I have my notebook right here, so I'm taking down notes as I do this. What I also want to continue doing is at least wait for 10 a.m. Be able to wait for 10 a.m., let it close. Wait for 9:30, let it play out, let it do its thing, and then once like 10 a.m. comes in, start looking for those setups to trade towards the buy side, sell side, whatever it may be. So now back on the daily time frame. Just getting rid of all of these here. So back on this daily chart here, again, displacing up here. I would like to see if we can get up into this imbalance up here. So on the hourly, what that would look like is this gap over here. I would want to be drawn towards. This is the resting liquidity up in the market currently. So I would want to see if we can trade up into this. So on the 15. So midnight is here. London did its thing, pushing higher, respecting bullish order blocks, bullish fair value gaps. Thought I was going to sneeze. But looking at price here, we have this order block here with the fair value gap noted above it. So I'd want to see if we can trade up down into this fair value gap and then push higher out of it. On a 5-minute, we have this gap here. Want to see if we could trade into that. Here we have a mitigation block with these two up candles. So we're just refining the PD arrays. So this is a mitigation block, which pretty much matches up with that fair value gap to continue higher. And this is 8:30, so let's go ahead and let that play out. Price consolidating. Here's 905. Pushing up a little bit. Here's 915. Just consolidating here. Okay, cool. Leaving these untapped. This means that price is a little bullish, pushing up for those higher prices. So now we trade up into that gap here. This is the hourly gap up here. Let's drop down into the the 1 minute. We can see some pretty clean levels of liquidity here. So we know that price has been bullish all from from London all the way up into the AM. So know that there's these pretty clean levels here with the imbalance below. Remember on the 15-minute, there's this fair value gap here and this order block. So tapping this hourly gap, we would want to see if this fair value gap here can hold price. If it can't, I'll look at this as the change in state of delivery and look for price to trade lower. Looks like we can't. Looks like we form an order block right here at the high or at the low or the premium of the fair value gap there. Price pushes higher after trading down into the mean threshold. Let's see if we can find support here. We don't. We trade straight through it. So now I know that this fair value gap here can't support price. It's unwilling to support price. All right. And even refined on the 5-minute, you have this gap here. But just to stick with it, be more concise, here on the 1 minute, we can't support this gap here. So what do? What do we see? We have a high, we have a low, we have a lower high, and we have a lower low. So these 1, 2, 3, 4, 5 down candles before the up move that made the lower high is a mitigation block. We could really even look at this here as the breaker. And also this last up candle before the down move as the order block. So I would want to see price trade lower from this level here. This order block stops above the highs and trade down for relative equal lows down here. So this is what I would want to see. Placing the order here, 0.5%. You get triggered in right at the order block. Price starts to displace. A little bit of drawdown. Looks like we're going to get stopped out here. Yeah, we get stopped out. All good. Zoom out. Looks like we're finding support at this 5-minute gap. So that's all good. Let's see if we can, and that's why I would have to wait for 10 a.m. Right? So that's a clear reason as to why I need to wait for 10 a.m. So I literally just set a rule that I want to start implementing and I disregarded it. So I have to wait for 10 a.m. Boom. Cool. So now let's let price play out until 10. Okay, cool. So now we take out liquidity here, take out even more liquidity, trading up into that level of a gap on the hourly, pushing up deeper into it. Now, if we know where liquidity is, we know where fair value is. If we know where fair value is, we know where our order blocks are likely to form. So we do have a imbalance here. And we do have a order block created here. So I would like to see, I'm still looking at these relative equal lows. These are way too clean for me. I would definitely like to see if we can get to those lows there. So maybe a little risky, but I do want to take this sell. Is there any reason for me to wait? And I know there's a macro from 950 to 1010. I'm inside of that. So let's test this out. This is why we're back testing, right? Let's test this out. Stops there, targeting the lows over here. Decent risk to reward. Let's see if we can place this trade. Get triggered in. Price respects the order block. The inverse fair value gap continues lower. Nice displacement. Nice gap right here. This is nice. I would want to see this remain open, or at least the mean threshold remain untouched. So I'll just place the, actually, can't I just, settings, style, background. Oh wow, they don't have the mean threshold. That's crazy. Cool, I'll just go ahead and do this. $50 template, save as 50%. This will be my last trade because I do want to get some rest. So looking here, I don't want to see price come up into this here. So since we have displaced pretty low, I want to see if we can find, move stops break even. This order block is resisting price. We're continuing lower. We created a inefficiency here, so this can be a silver bullet entry at the fair value gap here and displacing lower. Again, these relative equal lows are too clean for me. I want to see that taken out. Again, displacing lower, running below this low here, so that's a good profit taking level there. So I'll go ahead and take some contracts off. I actually take off about 70%, 75%. Take off 75 there because I cover my initial loss and a little bit more. So now we're up in a profit. Price starts retracing. So now that I have this gap here, I want to see this be used as a fair value gap entry to trade lower. I want to leave this as a breakaway gap. I want to see this left open. That'll let me know that we're truly bearish, looking for displacement. We also have this breaker block here that should resist price as well. We tap into the mean threshold here. Let's see if we can respect that. Nice. We do respect the mean threshold of this gap here, fully filling in this BISI. Let's see if we leave open a SIBI. We don't. We fully rebalance here. So let's see if we can continue lower on that. Nice. Nice displacement. There we go. Stopped out. I said stopped out. TP hit. Good trade here. This was amazing. This was a great trade. Everything made sense. Everything played out. Entry up here at the order block after taking out the liquidity, and after the inverse fair value gap was, the fair value gap was turned into an inverse. Relative equal lows down here, super clean. Want to see that taken out. Price displaces lower. We enter in at the 10 a.m. macro. Take out liquidity here, retrace into the fair value gap here. There's your silver bullet entry there, and we displace lower in that first 20 minutes. So boom, that's the trade. Let's see what ends up happening. Yeah. Nice. and then the 1050 to 1110 macro is the profit taking macro. All of this I've been studying the 2023 mentorship model. I mean, not mentorship model, but just the 2023 mentorship. And I mean, I'm liking it so far. Like, I'm seeing a lot of it, like things playing out. Still backtesting, still figuring things out, still making sure that things can they make sense to me. Um, but yeah, this is a clean setup. So in the live markets, I probably wouldn't have taken the order block entry up here. Being honest, I most likely would have taken this setup here. I would have felt a lot more comfortable, especially seeing the displacement here. Taking the entry here. Stops here. Targeting this. This is what I would have taken. And again, it's a 1-3. It's a quick and easy trade, but it plays out. So I love this. I love that it's working. So currently up on the account about 0.9%. So gonna continue uh, playing with this, making sure that I can gain profitability and just staying focused, staying locked in. Key note for myself here is wait for 10 a.m. No trades until 10 a.m. because I literally could have saved myself a loss if I didn't take that setup before 10 a.m. This 0.5% loss, I should have taken, shouldn't have taken it. I should have just waited for that 10 a.m. and then taken that trade, and then would have been pretty good there. So there we go. That's a half 1.5% gain right there. So pretty solid, pretty solid. So happy for that. Other than that, I'm out of here. Gonna call this a night. Like I said, quick 30-minute session. I'll probably, instead of an hour, I'll probably dial it back to like 30 minutes or maybe even a little less, like 20 minutes. But yeah, let me know what you guys think of like quicker backtesting sessions, like 1 to 5 trades, not going on for super long. I know not many people like to wait and sit down and like the yapping sessions, but it is what it is, man. It's 11:05 over here, so I'm gonna wrap it up. I'm gonna watch John Wick, call my girl, and then until next time, hop on the next backtesting session. So peace.